Good evening, everyone. And what numbers? What huge numbers! But in fact, disappointing at this point of time. Sensex down 203,352 points at 77,566. Nifty 50 down 422 points at 24,000 level. Bank Nifty down 1,700 points at 56,000. Not only that, in fact, last night US market was also down. Dow Jones was down close to 600 points, and DAX right now is minus 422 points. Arjit, oh yeah, and we have Mr. Arjit Garg, a SEBI-registered research analyst, with us today to help us decode about the market wrap. Arjit, thank you so much for your time. Thank you so much for joining.
Thank you so much for having me, Pradhaman.
So, please tell us, Arjit, what do you think about today's market? Big numbers today, big fall in the market all over the world.
See, the fall was, everybody saw it coming over the weekend. We saw the US oil derivatives spiking up. We saw Brent crude in the Sunday session. It crossed $90 for the first time, which was very, very huge and very disappointing, especially for traders like us, people who deal with the markets every day. And such stuff happening over the weekend is very disappointing because we cannot capture the move on weekend. All we can do is just pray to God that please, ज़्यादा market mat girana. But talking about the markets and the levels that you've seen, in a recent video with Advisors, I shared some important levels for Nifty. I mentioned 24,000 and 23,800 as crucial support for this coming week, and we tested both of these levels just in one day today. Markets opened with around 3% loss in morning today, exactly at 23,826, which is closest to our level, which is 23,800. Later on, we went up, we touched the level 24,000 and we closed at 24,008, which is exactly at our level, which is 24,000, which was mentioned. So, सबसे पहले तो I think we should do a target hit stuff for our levels. Now, what's coming next is there are two things that can happen. First, if the global uncertainties, the war which is happening in Middle East, it has escalated a lot to a level that now we are attacked. Now Iran is attacking the water sanitation plants. Israel attacked some of the huge oil refinery storage plants, and now they briefly had a river of fire in Tehran. So now that all of these stuff is escalating so much, there are really two things that can happen. First is there can be some of the other ways to de-escalate. Maybe there would be some fight within the allies which are fighting right now, US and Israel, or maybe there might be some de-escalation talks from Iran side. Something which can lead to de-escalation and maybe something which can give us a hint about the war ending or maybe the risk getting lower. That will push our indices up again to previous levels, which we can see on the screen is 24,300 again. Now, this is just one thing that can happen. The other thing, if we see on the negative, is the war can escalate to a next level that we have included all the Middle Eastern countries and we constantly keep attacking them, not us, the Iran. Iran keeps attacking those countries, and then the countries retaliate and become a part of the war. This is when things get even more complicated and things get escalated a lot. In such cases, we can see 23,300 coming in this week itself. That's like another 2% fall. What should investors do in such scenarios? See, what usually we would think is dip hai, let's buy the dip. But this is exactly where people just burn their money in the markets, where they lose money and then they're like, "Arey, ye to satta market hai." Understand this market is not the market where you would buy the dip. This is not the buy the dip condition that we had during covid was different. Covid ke time mein the dip was there because we saw that okay, things will get better one day. With current scenarios, the current war scenario, at least right now, at the moment we are speaking right now at 4 p.m. in the evening on Monday, we do not see any hints of de-escalation or a point where we can see or hope that the war might get over. There's no news of such sort. So for now, for investors, we can wait and watch, select some good stocks. We'll quickly just go through the sectors as well shortly, and we'll see where is the right opportunity for us to invest. For traders, just look out for the right levels to approach. Once you have the right levels in place, once you have the right strategy in place, that is when you can enter the trade and make money out of this falling market.
Got it, Arjit. And in fact, right now, if we see DAX is continuously falling as well. But then, what I don't understand is generally when this war situation is all escalating, gold and silver seems to go up. But right now, both of them are actually, in fact, 1.5% down. What might be the reason for it?
Right. So gold may we already saw a huge rally as we can see on the charts already. We have seen a huge rally in gold, both gold as well as silver. I'll load up the chart for MCX futures for silver as well. We can see a huge rally that came in commodities just a couple of weeks before the war. So investors were already they were not prepared for this, but during the war they were like, okay, the rally has already come. Now we cannot expect more rally and more volatility in these commodities because gold is generally considered safe haven. Silver is also considered a safe haven. What's happening right now is maybe the countries are liquidating, they are maybe relying on gold, but the investors, retail participants are booking profits. They do not want to buy gold as a safe commodity right now. They're looking out for other alternatives, they're looking for other modes, other asset classes to trade. That's exactly why we saw a huge rally in crude. We can see this is the rally that we're seeing in crude. The crude opened at 10,000 rupees today. It opened at 9,000, but then intraday we saw a huge rally of 10,000 rupees. That's in Indian rupees. And if we just change our time frame, we can see that there is a multi-year breakout in crude happening right now. Not right now, but this rally was long awaited. You can see we are touching highs of 6 June 2022. That's when the highest uncertainty. If you remember the Russia-Ukraine war, it broke out exactly in 2022, somewhere around the same time, March, April, May of 2022. That was the time when Russia-Ukraine war happened, and that was the time when crude spiked to such levels, the same levels that we are retesting right now. Now, what can happen from this level in crude? Again, there are two things. First is maybe we can break the earlier levels and touch fresh all-time highs. Now, that is unlikely. Why? Because we have already seen a very straight vertical rally in crude. Every asset class in the markets, be it stocks, be it commodities, be it mutual funds, be it anything, you never see a straight vertical rally. If you see one, there's always a point where the prices would come down and you get a fresh opportunity to buy. एक बार ऊपर जाएगा तो हमेशा ऊपर तो नहीं जाता रहेगा, कभी ना कभी तो नीचे आएगा. Now that is the exact point where we have to wait for, and that is the exact point we have to look out for to enter into a fresh trade at crude right now. For investors who are already invested, I think this is a very brilliant time to book profits. There won't be any better time to book profits in crude right now, because touching such higher levels, now that things are maybe they would start to de-escalate, and if that happens, you'll see a sharp drop in crude right now. From 9,500, we might see 7,600, 7,200 in the coming weeks if de-escalation happens. And if that happens, if you buy right now and de-escalation happens, you'll get trapped and you'll lose your hard-earned money. So what you have to wait for is maybe a sideways market might happen in crude right now. You'd see a sideways movement, say for next 2 to 3 days, if nothing new happens. But we do not have to buy right now. We have to wait for a fall, maybe a small down touch. Maybe you can see 8,400 in the upcoming weeks. That might be a good time to add crude again.
Got it, Ajay. So before we move to the sector of the week, I want to discuss about the banking sector. If you look at the bank Nifty today, it was down 3% compared to the mean Nifty 50 or Sensex. Why do you think there was such a sharp selling in the banking sector? If you see SBI, it was down close to 5% today.
See, there was no major news related trigger in the market today. Everything was dependent on global uncertainties and the global war and everything which is happening. If we just pause on Bank Nifty and if we just skip for just a moment, if we skip Bank Nifty and we see Nifty intraday, we'll see that because there were no news as such, nothing negative, we did not have any positive triggers as well. We can see that Nifty did open low, but we ended up crossing a crucial important level of 24,000. Same stuff, if we look into Bank Nifty, I believe that would be the same case in Bank Nifty. We opened low and then we closed around the day's high, which means that investors are they're really wanting the markets to go up again. So related to what's happening with Bank Nifty, there's nothing new. There's just the sentiments are negative. That is why These negative sentiments are dragging all the sectors down, be it IT, be it consumer durables, be it bank nifty, be it PSU banks. PSU banks were also among the top losers today with around 4% loss. What was the major news? There was nothing major as such. Just the sentiments are negative. Some of the stocks, as you mentioned, SBI had already given us a very beautiful rally just a couple of weeks ago. If you see, we had touched 1000 rupees, 1100 rupees we had crossed in SBI just a couple of weeks ago on 11th and 12th of Feb. So I believe a small cool down was already required. We can see there was a gap earlier as well, and now there's a gap again. This gap now was covered earlier, but this previous gap, we had to cover this gap, and this is exactly the area where SBI came in and traded today. So I think such rallies and such gap filling, which is happening in the market, is triggering a downfall in the entire index. See, because what is an index? Index is made up of stocks. So if stocks fall, the index would fall automatically. So that is something which is driving Bank Nifty and all the other sectors together.
Got it, got it. Ajit, if there is any one sector that we need to look out for in this particular week, which one would it be?
I think, given the global uncertainties, and if we just keep global uncertainties aside, this one sector, which I like to call it the evergreen sectors, and I believe a lot of viewers who are tracking markets for a long time, I think they would agree with me that pharmaceutical and healthcare is a sector that it's an evergreen sector. There's very rarely there's some chances of pharmaceutical and healthcare sector falling. You'll see a very beautiful rally intraday. We have touched yesterday's closing in pharmaceutical sectors, this is Nifty Pharma Index, which I've loaded. And I think I've got one stock from pharma and healthcare that I'd like to share. The stock's name is Glenmark. Again, just like how pharma sector has given us a move intraday, you'd see Glenmark has given something similar. We have touched yesterday's close here again, and I believe from here, no matter if the sentiments go negative or maybe if we see de-escalation, everything becomes positive again, we'll still see a rally in Glenmark at least till the level of 2200 in upcoming days. So I think Glenmark is something which we have to watch for, and we have to maybe, if possible, if we have the right funds and if we have the right timing for Glenmark, maybe we can invest in Glenmark right now up till a target of 2200. For sectors, I think pharma is something which we have to keep it in focus. People would maybe they would suggest defense, but see, defense has already given us a rally. We'll see past few years defense has been rallying a lot, even on small order wins the stocks rally. So defense becomes very volatile in such market scenarios. Pharma is something which is evergreen. Even if the sentiments are negative, positive, pharma would still keep moving. People won't stop buying medicines. They won't stop going to hospitals. Anything goes wrong, you just go to a doctor in a reputed hospital. The hospital doctor recommends you good medicines, good branded medicines. And this is exactly where stocks like Glenmark start to perform well.
Perfect, perfect, got it. Ajit, now at times of this uncertainty, what do you have to say for investors who are looking to enter right now? And again, you can combine that with general mistakes that an investor, retail investor makes.
I think the best thing that right now any investor, any trader can do is mark the levels, wait for those levels to markets to come around those levels, and invest at the right time and the right point. See, if you, as I mentioned earlier in this session, this is not the market to buy the dip. What usually investors would do or traders would do, okay, we've got a dip, market is falling 2%, 3%. I think अब यहाँ से market जाएगा, we'll start buying the dip, and they would literally buy the dip blindly. That is not what is to be done in such market scenarios. One negative news and Nifty would again fall another 1%. If we see crude is something which drives the market. If crude's rally starts rallying once again, we'd see Brent crude at 112, $113 today. If this rallies up and goes up till 120, 130 in the coming days or maybe coming hours, overnight anything can happen. If the crude rallies again, we'll see another downfall coming in Nifty. So the most important thing that we have to do right now for both investors and traders, mark the levels. Do not blindly buy the dip. Mark the levels, let the markets come to your level, find the right opportunity, find the right stock and invest accordingly. Do not buy the dip blindly. I repeat again and again, please.
Got it, got it. Great session, Ajit. I think we have covered all the bases. Do you have anything else to add?
No, I think the most important thing is to be in touch with such content platforms where you get the right guidance and the right levels for the market. You can either choose to mark your own levels, or you can choose to get in touch with the right expert at the right time and get the right levels for your investments. I believe Zadvisor is a platform where we can, interact with a lot of experts, get the right guidance, and you can also start investing at the right time. So yeah, stay in touch with your experts, stay in touch with the right platform, and invest wisely.
Done. Thank you so much. I'll drop the link to download the app in the description down below. Arjit, thank you so much for your time and thank you everyone for joining.